Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here today. This is your one-stop shop for cryptocurrency analysis, among many other things. We're taking a look here today at Ampleforth, which is a really interesting coin. I find this to be a fascinating one. I took a quick peek at it just before we started here, and I think it's going to be an interesting analysis. So we just look at the technicals, no fundamentals, but if you have insight on that, comment below. And just know this is for educational purposes only. You should always do your own research. I'm not a professional, right? But I have a lot of experience. I've been trading for over 10 years, and I would love to be able to help educate you on best practice. And that's the whole point of this, right? So you can learn something and just become a better trader. Teach you to trade for a lifetime instead of just for one day, right? Now, if you prefer the daily thing, I have a signal group down the link in the description below through my Patreon account. Feel free to check that out. I send signals, 2 to 4 signals per week, and we're currently hovering around an 80% success rate. So it's been a pretty good experience so far, minus some of the indecision in the market recently. However, when you get a chance, also recommend checking out my Telegram community. Good group of folks there. You can learn a lot. Jump in there, get engaged. Link in the description below, among other social medias. Go ahead and check that out if you'd like. Well, why don't we just go ahead and check it out? Enough rambling from me. Let's get to it. All right, folks, let's go ahead and take a look at Ample. And before we do, we always look at Bitcoin, Ethereum first. So if you're new to the channel, we look at those major coins first because we always like to understand their impact on the market because they are the two largest. And pretty much everything is reliant on Bitcoin, right? So if we know the correlation between those, we really understand and kind of helps us know the big picture because a good trader will always look at every angle, not just what's right in front of them, right? So we'll go ahead and take a look at that first. And just to preface, this is a TradingView.com desktop application. I have the premium version. I recommend you get something similar, at least a paid version. Link in the description below for that if you'd like to save. I think it gives you like a free month or something. But I'm recommending that just because the indicators that I use, you need to have more than just two present on a time frame or just a chart. So it does help me to kind of maximize my benefit. So I might recommend the same if you'd like to follow along. I use the 50 and the 200 days simple moving average. That's this orange and purple line. The orange one is the 50 and the purple is the 200. As you can see, the price is above both. So great news, the price closed above both moving averages, so we're in good shape there. This is now a support level, potentially, and the 50 is a major support now that it's broken above. But the bottom line is that the 200-day simple moving average has a tendency of giving us false positives, like pregnancy scare. Oops, we don't want that. Well, it depends on if you're trying. That's a different story. Who cares about that? What I'm getting at is a simple fact that when the price goes up above, right here, for this example, you can see that the 200 was tested and essentially rejected not less than 12 hours later. All right, so even though it broke through and stayed above, it came back down. And it still worked as a resistance. And that created essentially the major resistance of 36,500, which is this blue bar here. Also note there's a major resistance at about 40,500 plus or minus a few dollars. And of course, the oh so famous $30,000 support level that was broken and I closed. The one-day chart actually closed below. That was a new precedent for Bitcoin. A lot of us thought it was going to, it was a shorting opportunity to go down to 28, 24,000, but the bulls rallied back and brought the price back where it's at now. So we're in very good shape here for Bitcoin. Obviously not in the doghouse yet. We've got 36,500 is the next major resistance level, a few smaller ones in between. So just be mindful of how the price responds to the 200 here, because I speculate that we'll see a slight retracement. The price will maybe go sideways or down, but it will probably test 33,000 even, which is where the 200 is currently sitting. Just be aware of that. There's a strong likelihood of that. What we hope for is the price comes down, bounces off the 200, and keeps progressing upwards. Otherwise, if it breaks below the 200, we'll see it work as a resistance again, and then the 50 is the next major milestone. Well, I wouldn't say it's a milestone if it's going down, depending on if you're shorting or not, but that's kind of the way it is, right? All right, so let's look at Ethereum next. And if you can see here, look at this. Do you see a similarity there? Yeah, they're almost the same. Ethereum is essentially Bitcoin's, ugly stepchild. I don't know, whatever you want to call it. Insert reference here because it's essentially doing the same exact thing as usual. So it's basically doing what Bitcoin does, only worse in a sense. But right now I've noticed it's kind of working almost identical. It's like a mirror image of it right now, when previously it was underperforming. But what's odd is it typically overperforms Bitcoin. It does this when Bitcoin goes sideways. I don't know. Ethereum's a strange beast, but right now it's up over the 200 and the 50. Great news there. The 200 was tested a couple times and it's working as a support level. We also have a major resistance at about 2,400, and then furthermore, we've also got a support level of about 1,725. Okay. Last but not least, a major resistance at about 2,900 that was tested about 10 times, but that was way back in May/June. So it's really hard to say if that'll be another thing again. If Bitcoin does ramp up to 36,500, break that resistance, progresses towards 41, 42,000, breaks that, Ethereum will be open season. We'll see 3,000 from Ethereum again. Till that point, we are in a position right now where it's not good, not bad. It just is what it is. Okay. So moving on to Ample, let's take a look at this here. So Ampleforth has some amplitude, as we can see, and oh boy, it's done a lot of strange stuff in the past. All right, so let's take a look at this here. First of all, it's been around for a while. Okay, so this is the one-day chart, and based on this, we can see that somewhere in the range of approximately November 2019. Its ICO date. It had some crazy metrics on the 17th of November, but since then it's been kind of fairly steady, I guess, depending on how you look at it. Look at that, is insane. Look at that price action there, and this back in 2000. So that's it'd be interesting to see how that correlates with Bitcoin, because Bitcoin was not half the man it is today, right? Okay. Anyways, let's go ahead and focus on the current state of the nation here. So I like to identify how Ample is similar to Bitcoin. Okay, so that's the first thing we're going to look at. And in other words, we're going to look at the major sell-offs from Bitcoin, because that really influences the most. When Bitcoin sells off, if Amplitude does the same thing, or sorry, Ampleforth does the same thing, then we will essentially be able to identify there's a similarity or index there, right? Obviously, it's ramping up today, but Bitcoin did too, so we'll see. So April 17th was the first major Bitcoin sell-off. So that is right here. So this is April 17th. That doesn't look like a sell-off to me. It kept going, but on the day after, it kind of retraced and in a state of indecision, and then increased again. And then there we go. The 22nd of April was the second major Bitcoin sell-off. And then on the 25th, Bitcoin ramped back up, and things got, most altcoins went bonkers from the 25th through the 28th. And this kind of did, but it also retraced. So it's kind of finding its average true range here in 117, 110, let's just say 110 upwards of 140. So 110 to 140, I would say, is its average true range. In other words, before Bitcoin sold off, that's where it was trending. Okay. Then obviously we see May 12th, that's the Elon candle, and of course May 18th here /19th was the China candle. But it did recover and do well. In fact, interesting, it's almost like a mirror image of Bitcoin. Minus today here, if you take a look at this, Bitcoin basically did the same price action, only the opposite direction on its way down. Whereas Ample did that too. It only worked as it had a resistance level it kept rejecting at about $1 at 106, 107, and then eventually broke through here today. So let's go ahead and mark that really quick. We've got a major support and resistance at 107 and 108. We'll just say 108 since that was the recent break. And generally speaking, RSI is up over 70. No surprise there. We're like, we're up at close to about 80. And that's because we saw a good, how much percent is that? About 42% in the last 28 hours, somewhere in that range. So, pretty good growth. That's a lot when you think about it. But is it, tremendously high? Probably not. I mean, when we look back here, again, let's exclude the previous action there. We want to kind of almost focus on this year alone. This year, we've had the most, the average highest point was roughly $1.66, and that was this year. So we'll just go ahead and mark that too, because that could be a very strong resistance level when we get there. Furthermore, the MACD obviously swung upwards here on the 21st as a convergence, and that's usually a buy signal. So had you bought in there, you would have experienced that 45% increase. Again, easier said than done, but we'll just go ahead and mark that guy there. All right. So moving on to the 4-hour chart. What we're looking at here, pretty obvious. We can see the major resistance level there. And now it's a support at $1 and approximately 8 cents. We can see also the prices above both the 50 and the 200. This is a great sign. We like to see this on the 4-hour chart because that shows that we are working, in bullish territory, or more so just, we have that momentum that's above there. So they're now support levels, no longer resistance. Obviously, the RSI is overextended. So if you have an open position right now, the general rule of thumb isn't to sell when the RSI gets to its highest point. is to consider trimming and or selling if you want to exit your position when it starts heading back down. Okay, because again, any kind of increase like this will likely retrace about 50% of the way back down. So if this were to retrace, I'm just spitballing here, but on average, this tends to work out a lot of the times like this. And coincidentally, the Fibonacci retracement tool kind of confirms this, but usually the price will retrace about 50% of the time, somewhere in the range of 50 to 60%. I'm using this because it was a support and resistance level. You can see it was tested above and below, so I'm marking it there. But I'm going to venture to guess that's the new support, the one that might get tested if the price retraces back down, roughly about $1.34, $1.35. All right, so that's the 4-hour chart. Not much else to disseminate. Oh, you know what? We do want to look at the MACD and see where the convergence occurred. It looks like it was July 19th at 1300 hours. So let's go ahead and take a look at that. Did I say 13th or 19th? Yeah, July 19th at 1300. All right, so let's go ahead and mark that. July 19th, 1300. Put a line right through there. All right. I like to do that just because these are the MACD, right? The moving average convergence divergence. So every convergence in the MACD I've marked on the 1 day and the 4-hour chart. And I like to draw a reference to that because those are typically really good indications of buy signals. So in retrospect, had we invested back there, we would be in a really good shape to have about a 63% increase to the current price action right now. Again, easier said than done, but that would have been a good indication. The reason why that's relevant is if we look at the 1-hour chart and then confirm with the Ichimoku cloud, there's a strong chance that they are going to work together. Now let's go ahead and disable the moving averages because on the 1-hour chart, they become less relevant, the simple moving averages, but we want to enable the Ichimoku cloud. So let's go ahead and take a look here. So these are my two MACD convergences, right? Where the 12 swung upwards versus the 26 intersected in upward fashion and essentially gave us a convergence. So let's take a look at the Ichimoku cloud. Take a look at this. This is awesome. All right, so I marked this little squiggly line here, which was straight, by the way, on the 4-hour chart, but squiggly now is essentially the time in which the MACD on the 4-hour chart converged. All right, so right here, we got a convergence. That being said, when we got that convergence, that would have been an indication of a buy signal. Furthermore, what you do before you take entry, or oftentimes you want to do this as well because they correlate similarly. They're very close to the time frame. So this is a 1-hour chart. So these are 1-hour candlesticks. So no less than 1, 2, 3 hours later, the price broke above the cloud. Now, granted, it broke below again and came up again, right? So it wasn't a full-on confirmation because that was technically a red candle. But the bottom line here is that less than 4 hours later, we've got a confirmation of it or a break above the Ichimoku cloud, right? So that's amazing, right? So 4 hours it took from the convergence that we saw on the MACD to identify a breakout on the Ichimoku cloud. Okay, so if you're new to the channel, the Ichimoku cloud just kind of helps us identify good entry points. So if it's below, it's considered a sell signal. So this would have been a good short position. And this is essentially a long position here, as you can see, continued upwards, right? So that's kind of what the common rule of thumb is there. And we'll go ahead and take a look at exhaustion here potentially with the TD sequential, see how much longer we have left in this bull run. Now this isn't 100%, right? But for the most part, you can say that any good bull run, if it has a chance to retrace it well, that's normal, that's very standard. A lot of times it goes sideways. A good bull run will have a good somewhere in the range of 8 to 10 hours. That's a normal standard bull run. Now the TD sequential is nice because it identifies exhaustion. Usually, at least according to the TD sequential, when the number hits a 9, we have 9 straight bars of increase. Essentially, this most recent bar was higher than the previous 4th bar. You don't need to remember all that, but the bottom line here is that when this number gets to 9, and it will likely, based on its momentum here, it'll likely reset and retrace back down. So if you look back here, for example, take a look at this. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, and it reset. It came down and started over. Right now, this wasn't a major retrace. It wasn't massive, but it still retraced. And if you look at this, interesting coincidence from the 1 to the top of the 8 here, you take 50%. That's where the bottom candle hit. Right. So you're talking exactly 50% retracement before it bounced back up. See, those things happen, and I guarantee, you look at the Fibonacci retracement tool here too. Look at that, smack dab right in the middle, almost every time. So these are just things you want to kind of pick up on. Most retracements occur, they recur 50% of the time. In traditional stock trading, that's not always the case. Retracements aren't super extreme like with bull runs or bear runs with crypto. It's a little different. You can utilize the top or the lower quadrant. But in this case here, we see that the most recent price action, I just blindly marked this. When you go from the bottom to the top on the Fibonacci retracement tool, it tells us exactly that 50% was the retracement that occurred. And coincidentally, look, we saw a 9, came back down and bounced off. Actually, that's no coincidence, but that is just the way it goes, right? So that's how TD sequential is beneficial. Again, there's more moving parts there, but that's a general consensus. That's how you want to understand it. And it really just tells us that we have, I would say, 3 more hours before the price will come back down to retrace, and it'll likely retrace down here to 1.3. Okay. So just something to understand. That's where the 1 hour chart is helpful, because it kind of gives us perspective on market exhaustion with TD sequential and Ichimoku cloud for kind of good entry point signals. And you want to utilize those in conjunction with the MACD. You get a 1 hour Ichimoku breakthrough and a 4 hour MACD convergence that's very strong. And we're talking great things happen, and you can see that here. I don't know if I marked this already, but we are looking at about, again, 64% from that alone. All right, so I'll go ahead and summarize here with the 50-minute chart, and then I'll give my prediction here in a second. When it comes to the 50-minute chart, the thing you need to understand is that the 50-minute chart is one of the best time frames out there, hands down, for being a day trader, even a swing trader, right? If I could choose 2 charts, it'd be the 4 hour and the 15-minute. If I had to choose between those two, probably the 4 hour still, because I'm predominantly originally a swing trader, but my day trading self tells me that the 15-minute chart is the best chart. And the reason why I say that is just because it gives us good confirmation. And I know if you're new to the channel, you may not know what confirmation is. I'll explain that. But good confirmation is understanding that if you're going to take a bullish entry, right, a long position, that that the bulls are in control. Right? If you're going to take a bearish entry, a short position, that the bears are in control. Why fight the current? Why swim upstream? You want to just go ahead and take it easy, get your inner tube, and go downstream. That's all good. In this case here, that's the same scenario. So for the 15-minute chart, if we look at the EMA and VWAP notifications, it helps us identify those signals. Now, these little indications here that you have, those are available through my Patreon account. Feel free to reference that in your own time. I do have signals as well in that signal group. We're averaging about 80% success rate currently. Regardless, so I utilize all these things we just learned in that to send out those signals. And what we're looking at here is a strong bullish run, right? So first of all, the EMA line is the red line. So that's the exponential moving average. I use the 15. It's coincidentally the same thing as the MACD. In other words, the MACD uses the 12 and the 26 that intersect in upward fashion or downward for a divergence. But that's essentially what we use to identify that we had a good entry point a while ago. We got that 64% increase based on that. But furthermore, the EMA is nice because it really helps us identify bullish and bearish trends. So if we can see here, we got a bullish trend where the price is above EMA, bouncing off EMA, staying above. So right now we're still in the midst of a bear run, a bull run. This is a bullish run. So if we get rid of those here and we look, obviously the bulls are in control. Furthermore, we have the VWAP line too. It's kind of like a secondary support. It's a moving support that moves with the price. It takes the volume of the last 24 hours, expresses it as a price. So we look here and we see this price action increasing. We see this moving as a support level up. And here's the beautiful thing. You see the price come up here, retrace, and bounce off this resistance line. Price comes down and bounces off of this support created by the volume weighted average price. So again, in the last 24 hours at that time, the price should have been $1.22 and it bounced off, worked as a support. As you see, it comes back up here and the VWAP line jumps up. Bear in mind that's completely normal. It has to reset for standard deviation purposes, but it resets every 24 hours. And that's beneficial, of course, because the fact that now you can see it's working as a support level as you get a little bit closer here. Okay, because it has to reset. So a lot of times I'll try to avoid entry right at the reset point because that doesn't give me that full-on confirmation. But to me, the bottom line here is that if you can get good confirmation above EMA and VWAP, then you're going to be doing a really good shape because, again, you're working with the momentum. So let's give an example of what a good entry point would look like. And it's really easy to identify with this tool that I have. So with this indication that I have an EMA VWAP notification. It's built in. I can provide that to you as a Patreon account subscriber. But if you look here with the up arrows here for the yellow, it's basically telling me that we have two 15-minute green bars closing above EMA and VWAP. The reason why that's beneficial is because you have 30 minutes of confirmation knowing that the bulls are in complete control, right? So the bulls are in control here. You go ahead and take entry. Comes up, you utilize the EMA line and you pay attention to how the EMA bounces with the price. So if the price bounces off EMA, it's holding support, and you continue to add to your position or stay in your trade. Right there. Nice little bounce. It comes up, goes sideways for a little while, breaks below the EMA line. But don't worry, we're still above VWAP, so it's safe. We're safe. Good stuff there, right? And then as you continue on, you can see we've got this, bounce, keeps testing, but it bounces off, right? That's why the 15-minute chart is nice. I mean, if you look at the 1-minute chart, it's chaos. Unless you're trying to just do like some really short term, in and out within a few minutes. It's a different story if you're just trying to trim. But when this comes to, more, swing trader mentality / day trader, holding for 1 day or, 24 hours or less, this is the tactic to utilize, because again, the bulls are in control. All right. So as you can see, it just continues to test and reject. Coming right there, it bounces off EMA. So, I mean, at this point, based on this run here, I would say Ampleforth has the amplitude it needs to continue to increase. And obviously Bitcoin right now, if we look at the 15 on the Bitcoin, yes, it did increase, but it's kind of tapering off and going sideways. Actually, it's pulling up a little bit. But if we look at this here, this is more consistent. This is ramping up, contrary to to Bitcoin in a sense. Again, even though it's still very reliant on Bitcoin, we saw that before. It does retrace when Bitcoin retraces. When Bitcoin does well, Ampleforth does very well. Okay, so it's kind of like an exponential mover instead of just a clone, which unfortunately a lot of the ADAs, the Matics, those are all moving synonymous with Bitcoin. This moves independent of Bitcoin to an extent, right? Everything's relying on Bitcoin, but this one is essentially kind of moving contrary to that, so to speak. So again, if for my prediction here, if Ample has an increase, just say it increases a little bit further, we can expect a retracement. Okay. But the bottom line is that if Bitcoin continues to do well, say Bitcoin goes sideways for a little bit longer, which it probably will, it might come down to test the 200-day moving average at 33,000. If it does that, then I would say the Ampleforth will probably stay and go sideways. It might come down to bounce off of this support level of $1.35 and then continue back upwards. Because again, you got to understand that in the last, the last 4 hours, sorry, it's getting a little messy here. The last 4 hours, we're looking at, sorry, not 4 hours, 24 hours. We're looking at about an increase of roughly, 36%. So what we looked at already, right? Fibonacci retracement tool, just a general common law of retracement, it usually comes down 50 to 60%, which is right here. That's why I marked that. I think we could probably confirm that with Fibonacci. That's exactly right there. So no surprise that $1.35 plus or minus 1 cent is considered to be the current support level. All right. So let's see what happens. But if Bitcoin goes sideways for a bit longer and retraces down to the 200, we will probably see Ample come down and bounce off of this here. But bear in mind, we still got probably 1 or 2 more hours of bullish momentum according to the TD sequential. That tells us we probably have an expected retracement soon. How far of a retracement, it's hard to say, but I'm going to venture to guess that it'll bounce off of one of these lines here. This one, probably this one. All right. So if you found benefit from this, please like and subscribe. Really appreciate your support. Let's grow the channel. Let's get engaged. Join my Telegram community too. There's a lot of good groups of folks there. Well, one group of folks, but they're all awesome. And I'd like for you to get in there and kind of get engaged. You can learn a lot. I also forward messages from my premium account as well. So reference that also in link in the description below. The first of the month is the best time to register just because you get the most benefit. Take a look there. But I do, again, thank you so much for joining me here today, especially if you watched this far. You're all awesome. Go have a great rest of your day. We'll see you in the next one. Take care.